Right now, roughly 700 million people around the world are holding on to a combined digital asset pool worth over $3 trillion. This aggressive market has generated an entirely new financial demographic, including an estimated 250,000 newly minted crypto millionaires. This capital surge isn't limited to tokens. We're seeing huge wealth generated by employees and founders cashing out shares on the secondary market from hyper-growth companies like SpaceX, which has reportedly minted hundreds of new 100 millionaires. The same dynamic is appearing in the artificial intelligence sector, with leaders at firms like OpenAI representing a new tier of the tech elite. Between these newly minted millionaires and the surge in high-growth private equity, we are seeing a massive, concentrated expansion of the ultra-wealthy consumer class. However, there is a structural bottleneck keeping all that new capital from actually entering the real economy. Instead of functioning as usable money, digital currency is largely treated as a speculative store of value, locked away like physical gold bars. Selling these digital assets to get usable cash means navigating complex tax implications, facing long wire delays and legacy banking hurdles. It creates a paradox where a consumer can hold millions of dollars in purchasing power on their phone, yet they still struggle to spend it on real-world goods. Until that capital can flow directly out of digital wallets without relying on slow traditional banks, its actual economic utility remains restricted. Look at the private aviation sector. It's a traditional legacy market built around rigid systems and heavy physical assets. This industry faces a massive efficiency problem. A standard private plane flies roughly 1,200 hours a year, leaving over 7,500 hours sitting idle. This dormant lift is what operators want to monetize with high-end consumers. A charter company called RealJet recognized this mismatch. They decided to target the wealth held in digital wallets to fill their empty planes. To capture this demographic, they realized they had to remove the traditional banking process from the transaction. This high-end transport business is now actively adjusting its financial systems to access this specific pool of digital buyers. Rather than manually processing asset sales and waiting days for wire transfers, RealJet built a direct wallet-to-wallet payment integration. They partnered with Crypto.com Pay, utilizing an institutional infrastructure designed to handle large-scale digital transfers directly. Moving this kind of money requires high-level credibility, and these digital payment gateways are increasingly credentialized by legacy financial giants like Visa. Now, a customer can pull out their phone and pay a six-figure charter invoice directly from their digital wallet in a single step. That process bypasses the multi-day delays and currency conversion fees that typically slow down high-net-worth transactions. The system creates a direct link between the surplus of flight hours and the specific demand of the digital asset market. If we zoom out from the aviation market, this partnership serves as a high-stakes macroeconomic experiment. A private jet charter is a rigorous test for a new currency network because the transactions are large, the margins are tight, and the underlying assets are volatile. When a payment gateway can securely clear a $100,000 transaction in real time, the underlying digital architecture shows it can handle the requirements of high-value commerce. Successfully executing these transactions in the luxury sector provides a concrete example of how digital assets can function beyond simple speculation. The effects of this technology will likely reach far beyond the ultra-wealthy. The digital infrastructure currently used to book private flights is the same system being prepared for wider retail use. The objective is to allow consumers to spend their digital assets just as easily at high-volume, everyday locations like McDonald's. We are watching a digital asset pool mature from a hoarded investment into a functional medium of exchange. This partnership in private aviation serves as a critical test case, positioning digital assets to finally cross the threshold from an asset class you hold to a currency you can actually use.